Welcome back to the Stablecoin podcast. We're your hosts, Luther Midday and Rami Suleiman. We're co-founders of Stablecoin Partners. Today's conversation sits right at the intersection of traditional banking and digital assets. Our guest is Nicolas Marxer, head of blockchain banking at Bank Frick, a regulated European bank that has been working with crypto-native businesses and digital asset infrastructure long before it became fashionable. We're unpacking how banks are actually approaching stablecoins, payment innovation, and cross-border settlement. But before we get started, a quick disclaimer. The opinions expressed in this episode are those of the hosts and the guests and do not represent the views of their employers or affiliate organizations. This conversation is for educational purposes only and should not be taken as legal, financial, or investment advice. With that, Nicolas, welcome to the show.
Thank you very much for having me. It's a pleasure to be here.
Absolutely. For us to get started, maybe a good place is, how did you get into this space? And then we'll dive into what is a bank doing in digital assets.
It's a good start. So I joined Bank Frick almost 10 years ago. I was looking for a job to get into banking, coming from a little bit a different finance background, but I was looking into starting my banking career. So there was this open position in this small bank in Liechtenstein, which was looking for some help in building up the so-called business development back in the days. And it marked also the starting date when we started working with crypto-related companies back in the days. So that was almost 10 years ago, and literally at the day when I started, we really started shifting the focus towards the crypto-related clients, the blockchain-related clients, however you want to call it. But yeah, it's been almost 10 years now since I'm with Bank Frick and working in this space.
I didn't realize it was that early, actually. That's super early, actually, for a bank. How did you manage in Liechtenstein, which is generally at the conservative end of the spectrum, banking-wise, to get the mandate to get into such a futuristic business line like crypto?
I think Bank Frick was already in the position of doing things differently, which is nowadays also our slogan. So we were principal member of Visa and MasterCard already years ago before that. So it meant we were not always looking for the traditional private banking. We're always thinking, what can we do different than others? And from that starting point, moving into the payment world, like serving payment service providers, it's not that far away from the next level, which was then blockchain-related clients. I mean, payments in combination with blockchain came then a little bit later, but it really started off with serving clients like with basic banking needs, what they had back in the days. I mean, imagine 2016, a crypto exchange was not able to get a simple bank account, and there we discovered it's not much different than corporate banking. What's the difference in providing a crypto exchange with an operational bank account compared to a normal store? So yes, there are different risks associated, but if you can manage these risks the same way, I mean, you potentially have a new business area which you can work with. And that's actually how things started. We were looking at what is out there. So we started proactively contacting crypto exchanges back in the days and asking them if they want to have bank accounts, which then also started to move from simple operational bank accounts to client money accounts for their fiat on and off ramp pretty fast. And that was basically the starting point to expand to different business models. And as you all remember, 2016, 17 was the time when all the ICOs were done, when a lot of brokers came up, new exchanges, new business models in this sphere. So everything was moving very quickly, and we were trying different business models without any guidance. I mean, the only guidance we had was like the regulatory framework, which was around for normal banking. So we tried to apply that the same way to the new clients, what we did for the old clients already. But basically, there was no podcast, there were no books out, nothing which provided guidance in explaining what is mining, what is an exchange doing. So everything was learning by doing. And I think that was one of the keys for success, what we did back in the days.
What are some of the challenges that you faced right off the bat?
I mean, the one I'm always really like talking about was when we started offering custody services and we did book the first Bitcoin into our infrastructure. We recognized that our banking system was only capable of 6 digits after the zero. So that was a perfect example of how the traditional banking infrastructure was not ready for what we did. But it was a lot of challenges. I mean, like starting from amending policies to training compliance to training the people working with the clients, like that they understand the business model and can also understand the risks which are associated with these clients. I think it was a big challenge. We lived through it, but I think everybody was hyped. It was something new. There was hardly any bank around there which did the same, so it was quite a unique momentum for us. And it also the feedback we got from the clients, and not just locally, internationally, was really big, because there was this small little bank in Liechtenstein providing bank accounts for crypto related exchanges and brokers and so on, and everybody was reaching out to us from South America to Australia to Europe, everybody. And it started off like that, and it still is fascinating. But with more banks joining the game, I think it gets more mature. But back in the days, it was like, I would call it wild, wild west almost, because like it was a lot of trying how things work, always being compliant with the law and regulations, but there was not a Mika or something else that was far away back in the days.
It's one thing to bring internal folks along for the ride. How did you accomplish that with the regulator?
The good thing in Liechtenstein is that it's a very small country. So we always say everybody knows everybody. So it's also very likely that somebody knows somebody from the regulator. But it was always in our interest to be very compliant with everything we were doing. I mean, banking regulation is very strict, and we wanted to be very compliant with everything we were doing. So we were very early seeking the conversations with the regulator in presenting them what kind of business models we want to work with, what kind of services we want to offer, what kind of markets we want to service. And they really liked what we did, especially because we applied everything what we would apply to a normal banking client to one of these new crypto corporates, as we called it back in the days. And it was also the same time when the first licenses came up. So the first exchanges got licensed back in the days, which got already, it was a positive example to show to the regulator, okay, these clients are getting licensed, they have certain standards they need to meet, and we have our standards, we apply this to these clients as well. And that resulted in that they were very confident and okay with what we did. And we never had any problems in this sense. So we took them with us on the journey from day one, and we do that nowadays still, just in a different form now when we launch new products or different things.
How do they feel about the journey that you've taken them on? I guess they must be very happy because they're one of the leading or proactive regulators in Europe, I'm guessing, as a result of their journey with you.
I mean, absolutely. And I think because we were so early and working on these kind of clients, we were also, or Liechtenstein was one of the first countries to implement the so-called Blockchain Act back in 2020. So that gave the regulatory framework for serving these kind of clients like in a correct way. And I think it was really important that Liechtenstein was one of the first ones to implement something like this. I mean, Mika came years later to Europe, so we were already approaching clients and telling them, okay, this is a good place because you have regulatory clarity, you have a bank which is serving you, which was even more difficult back in the days. So they watched it from the beginning, and they're still, I would say, they're still happy with us. But it was definitely a journey and a lot of different and also difficult conversations. I mean, like imagine approaching them and explaining them what mining is. If you know mining only from a traditional sense, what is crypto mining? I mean, that was one of the challenging discussions we had back in the days.
It's very similar to when people usually talking about the cloud, right? You're like, well, the cloud does exist somewhere. It's not all in the cloud. So no, that totally makes sense. You mentioned various business models. What are those business models typically, and what did you see stick with your clients?
So if we look back, we started providing simple bank accounts, operational accounts, client on and off ramp accounts in various different currencies, which was the bread and butter back in the days. And it's still nowadays, 10 years later, to a certain instance, but it changed slightly, because what we tried to achieve in the long term, if we look back, we wanted to create a network where clients can interact with each other. That's what we did a couple years later. Then it's called Pulse, nowadays called X-Pulse, which is basically a 24/7 instant settlement system within the bank. That means we connected all the clients we onboarded over the years and who stayed with us over the years to each other. And our goal was always to create let's say, a closed loop ecosystem for clients, that they can use the benefits of being so close together in the same bank. And if you want, so you can compare it to what nowadays is happening. Okay, we want to make payments more efficient. We want to make payments cheaper. That's what we try to build in-house. But that would requires to have a bank account. So that was the main focus and the main approach. We wanted to have different kind of clients, different business models onboarded within Bank Frick, that they can interact with each other. Over the years, we definitely tested various different business models. We're also not serving, for example, anymore. We did work a lot with ICOs back in the days, with STOs back in the days, but the regulatory requirements were pretty high, and it was very difficult to monitor, because in the end, we were seen a lot of times as a partner in this ecosystem of the crypto companies, if you want to call it like them, but we're still a bank, and we had to apply all these requirements and standards to these clients. So it sometimes was very difficult to accept what they were doing. It resulted in that we had to decline a lot of clients, although we wanted to serve them, but we just simply couldn't. So that was more on the banking side. What we saw, it changed a lot also from just payments to also custody in a traditional sense. So it would be surprising to see how much of these crypto-related companies are interested in traditional banking services. At the same time, we introduced also crypto-related services like custody, execution only, which is more attractive for the, let's call it, classic clients again. So it's a very interesting trend to see. The more we develop on the crypto side, the more it's used by the classic clients, and the more we use the traditional banking services, the more it's used by the crypto-related clients.
What percentage of your customers use the crypto services of your offering? So, I mean, out of the classic customers, what percentage are migrating to use more digital assets infrastructure in the bank?
I think it's really difficult to give you an exact number there, but we stopped a while ago already to make a difference between classic clients and crypto-related clients. So it comes together to a certain point. I mean, what is a crypto-related client? If somebody's interacting with an exchange, does it classify that client to be such a client? Or is it only if you use real crypto-related services like custody or trading? But we see more and more of the, let's say, the private individuals using crypto-related services like custody, staking, execution-only services. On the other hand, also more and more interactions with exchanges, brokers, and OTC desks, for example. So it's a good mix, and they interact more and more with each other. It's great to see, and that's exactly what we wanted to create here.
Very nice. And this is a stablecoin podcast, so I want to ask you a question about stablecoins. How you, since 2016, have been there since the inception of stablecoins, actually about 10 years ago. That's when they started, with Tether coming onto the scene. What's been Bank Frick relationship with stablecoins? How have you used them into your offering? How have customers used them? It'd be interesting to see that journey over the last 10 years.
It's actually a very interesting question, because we've watched it over the years, of course. In our opinion, in the beginning, it was like mainly used as a trading pair and not as a payment tool as today, or payment instrument. The difficult part for us was always like, how are we able to create the bank standard for what we want to do? Which means if we accept stablecoins or if we enable stablecoins for clients, are we able to provide the same standard we would do for normal payments? So that was one of the crucial questions always. So which led to the situation that we started offering stablecoins very late, I would say. For us, it was always like when we were about to start integrating a stablecoin was like, is it the real one? Will it change? Will the hype be over for this one? It was like, because like you have a limited amount of resources, you have to invest in the right project. So we watched it very closely. We then added stablecoins to our offering. So clients were able to custody stablecoins, to send or to deposit and send stablecoins, to trade stablecoins. So we started that also a couple years ago already, but it was never used as their mainstream payment tool for the simple reason that we are still a bank and we are running on the banking infrastructure, which is, in my opinion, something which should be the next big thing for banks in general, to enable stablecoin payments the same way they have normal payments nowadays. And I think when we reach that point, we do really see a difference in how stablecoin payments will be handled. I mean, you have a lot of companies there which their bread and butter is to do stablecoin payments. But I would say for a traditional bank, it's not as easy as it sounds sometimes when you look at core banking system, policies, KYC, especially KYC. It can be a really tricky one. But we always looked at stablecoins. We think it's a very important development in this space. And I think it's also one of the first ones which we really see the real use cases on it.
With regards to the XPulse product, then, is that related in terms of internal network stablecoin payments, or is it sort of product agnostic? It can be any asset can be transferred between customers.
At the moment, it's just fiat to fiat. It's a simple internal ledger transfer, but that will be one of my goals, to enable all the asset classes on that, like stable coins, tokenized deposits, and so on. Like no borders, everything what happens within Bank Frick stays within Bank Frick. But I think that will be the next upgrade, in my opinion, for an internal network like that you don't have to limit yourself to fiat, but you can move all the assets 24/7.
Got it. Really good.
We're seeing the friction here in the US for the Clarity Act between stablecoins and banks. And you're sitting right at the intersection of that. How do you view that intersection point and your thoughts about tokenized deposits versus stablecoins?
I think they go hand in hand, I have to say. We just recently had the discussion in terms of, if you're a bank and you're able to custody deposits or securities, I mean, that's what you did in the past. If you want to have tokenized deposits, you need to have a custody solution. Okay. But what's the point of having tokenized deposits if you cannot move it or provide an advantage to the traditional side of things? Giving an example, if you can deposit tokenized money market funds, I mean, it's a great thing for banks, yes. But if you can only move it, liquidate it, or buy it during the opening hours from 8 to 5, there's not really a point, because it just, first of all, is more expensive for the customer and also the bank in order to maintain the infrastructure and everything. So in my opinion, as long as the bank itself or a bank itself cannot move assets 24/7, there's no point in offering something like that. For example, our infrastructure is not ready for that, or for various different reasons we don't necessarily need to disclose, but it's also a question of security and make sure that all the compliance standards are met. But it will come for sure in the future. But I think stablecoins and tokenized money market funds, for example, go hand in hand. I mean, you need stablecoins to be 24/7 in order to make the tokenized deposits 24/7. And so they go hand in hand, which is sometimes a little bit difficult because basically you need both at the same time. And if you work on one, you have a product which is not really be able to be monetized. and on the other hand the same. So you have to combine them. And I think we're really at the starting point there. We see a lot of companies going in this direction, offering these kind of services at the moment. We see also banks coming up with this, various different banks, like big banks or also small banks. But speaking about us, it was always a little bit or more important for us to service the client's need. And if we have tomorrow every client screaming for this, I think it will have a different priority than today if nobody asks for it. Because let's be clear on this. I mean, the ones coming to us need banking services, and we can provide them. If they need crypto related services, they're probably the ones who can provide better services themselves. So for us, it's always very important to make sure we put the resources in the right products and projects rather than following every hype and trend. Although I don't think it's a hype, it's just like currently more and more present in the news and everybody's talking about it. But I think it's one of it's one of the foundations we need to upgrade the current financial infrastructure, if you ask me.
Yeah, I think it's that unspoken truth in crypto that it's very fragile with regards to actual participation in traditional banking. So many companies that we think are massive, actually until very recently, or maybe even now, struggling with basic banking services are really they're not as available to the companies that we interact with in our ecosystem as much. And you've been looking at it from a decade's worth of experience, which is really interesting. Are you surprised at the slow pace of your peer group, other regional banks, other international banks, in terms of servicing these basic needs of basic core banking? What do you think has been the reason why there are not so many companies, so many larger banks or regional banks that are looking at servicing this space? Is it an education thing internally, or is it a risk averse, or what's your viewpoint there?
It's a lot of speculation from my side in that answer, but I think it can have various different reasons. I mean, like just one example, if you look at bigger banks or like say more traditional banks, private banks, you see a lot of let's call it old school bankers who think private banking is the only thing, especially regional here, and probably they are monitoring the trend and the developments around blockchain, stablecoins, and all the things, but either they want to wait, either they don't get it approved through their committees, either they don't want to invest in the infrastructure. I mean, there can be various different reasons. We heard all kind of stories like, okay, we wait, we let others do it, we just buy it at one point. What you can buy just to a certain extent is the experience, unless you buy the people and a bank, for example. But I mean, there are so many different reasons for doing it, and so many reasons for not doing it at the moment. It really depends on the situation, on the location, on the regulatory framework, the regulation in general, and everything. I mean, it's something people often don't understand how much effort in this transactional business is involved, especially if you say, okay, I want to service a crypto exchange. If you're a bank, you can open bank accounts, but what is associated with that service is very difficult. For example, if you have an exchange which has 10,000 transactions a day, you have to have people who are monitoring this. And if you have that amount of transaction, that doesn't mean that their end customers are willing to pay a fee for it. So that means that are costs which need to be covered to a certain degree. So it's not always you're serving a big customer, he has a lot of transaction that makes a lot of money. It's most of the time it's not that easy. So it needs to be a strategic decision from the bank whether it's possible, first of all, to handle the clients, and the second is if the bank wants to go into the direction. And then I think the most important point in that discussion is the correspondent banking, the clearing of the transaction. I mean, if you're lucky, you have some local clearing, so you're connected to local payment schemes and can directly do transactions. But as we all know, in crypto, most of the transactions are against US dollars in the end. you have to have US dollar correspondent banks, and that's something which was the most difficult part to get over the last 10 years. Because the big banks starting to opening up right now, and now we're in 2026. So it's 10 years later, and I think that is one of the biggest challenges for other banks to join that game, especially if they are smaller ones. I mean, if they're bigger banks, they have their deposits, they have their rails, although the correspondent bank can still cut them off from doing this business. But if you're a smaller bank and you're coming with these so-called high-risk transactions, I can imagine it's very difficult to obtain the rails in order to service these clients. So it's not necessarily a problem from the bank itself. It's also a problem from the correspondent banks that they are not allowing them to. But I think we will see more and more change over the next, hopefully, months and years. But I think it's not always just the banks which are not willing to go that route. But as I said, a lot of different reasons. Everybody's in a different position. We are very happy that we started early, that we gained our experience in this space, and we've seen almost every business model till today. What is possible, what is not possible, what is not doable from a banking perspective, and why not. So I think it's very valuable to have these experience over the last couple of years, which supports the decision from the bank itself to stay in this area and continue to build and grow and really want to stay in this, because we've always been told in the beginning, like, that's the disadvantage of the first mover. It's also the first one to disappear. But I think, and that's a little bit advertisement for ourselves, we did everything very carefully. Like we declined so much business in the past where we said, okay, we're not 100% sure, but in the end, it was the right decision because we're still here. We are working and building on it, and we want to stay here.
They do say you want to be on the leading edge, not on the bleeding edge, from that perspective. And exactly. I think you guys definitely are on the leading edge. With the passage of the Genius Act, how do you see your contemporaries or counterparts banks in Europe changing what they're doing?
I think Europe was a little bit earlier. So the general feeling of that it's getting accepted was a little bit earlier, in my opinion, in Europe. Asia is a different story again, but US fuels that hype again. So it's very positive to see that it's not just Europe, it's also the US and it's also Asia, which picks up speed on this one. And for example, like with MiCA, with Genius Act and everything like this, it's very important for players like the banks to get more confidence in servicing these clients, because they have to get a certain regulation. And I think that is the key to make it, don't want to say mainstream, but it's actually the best word for it, that it gets used by everybody. So we have to have regulated companies. We have to have banks which are willing to work with these regulated companies, and that allows the end customer to be confident in using these services, and at one point hopefully using this service without noticing that he's using blockchain or related services, because then we are at that point where we can talk about mainstream. It's the same what happened with credit card back in the days, and I bet most of the people when they tap their credit card, they don't know what happens in the background and what process is getting started. And the same way it needs to happen for stablecoin payments to a certain extent.
Ubiquity and the ability for the user to not have to know any of that in the back end is truly where we're headed. But with stablecoins, I have a question for you, and I want to put a disclaimer out there. I know you're not speaking for BankFrick or banks in general, but would love to get your thoughts as a banker on this concept of yield-bearing stablecoins versus what risk do they pose, or do they pose a risk to banks?
I mean, absolutely. In the end, it's a lot of companies are just looking for the yield, and they choose the partner and who they work with, who provides the most yield, for example. And if it's a cash yield in a traditional sense, as we all know it, if it's money market funds, or if it's a stable coin which provides yield, I think it depends a little bit on the risk appetite. I mean, everybody is aware of how money market works. Everybody knows approximately what happens if they hold cash in a bank account and what can happen. But they have to be aware that if they go for yield and holding stablecoins, I mean, it's probably even more risk today. But that can also change. I mean, we are going into the direction that things are getting more secure. They are. It depends who is the issuer. I mean, if you have $1 billion company being an issuer, or a private limited company with a capital of $1 million issuing a stablecoin and promising yield, I think it depends a little bit. It's a risk-based approach you have to have as a company. I personally see that it goes into the direction to provide a certain amount of yield for holding assets. I do really see it. I don't think that we see like 2-digit percentage yield in a, let's say, in a safe environment. That's probably a risk investment, which is also possible in the traditional world. But I think we will see something very similar. And that's in general what we're seeing. We're seeing a lot of what happens in the, let's call it, crypto space is copied from the traditional space, and it goes a little bit into the same direction, like, and which is nothing wrong. I mean, like, there's so much things which worked out very well, but just are outdated. They need an upgrade, and that's what I'm always saying. It's like we need to upgrade the current infrastructure, not reinvent it, because it works, but it can be better. So upgrade it, not reinvent it. So especially coming back to the yield topic, I do see yield on stablecoins. I think it's a great thing, because especially companies which are trading or handling everything in stablecoin, why would they need to go back to traditional fiat? I mean, if they can get the same what they can get in the traditional world, why do they have to go out of the stablecoin? And I think when we have that achieved, like all these kind of services, what you would find in the traditional world, if you can get that on the stablecoin or on the blockchain directly, I think then we're moving more into that new digital financial ecosystem, rather than yes, you have a part here, you have the payments here, but not everything together. And I think that's the ultimate goal we have to aim for.
But I think it's part of, you raised two things actually. Yeah, I agree with you. It's evolution, not revolution. So I get that. That makes sense. But I think it's also a question of access. So in the same way that lots of crypto companies have not been able to have access basic banking services, it's the same in terms of money market instruments and other things. A lot of that audience does not have access to these products, and these products provide that synthetic money market yield that allows them to get a return where previously they wouldn't be able to do it in the real world. Because I agree with you, it's a digital version at the moment of a tokenized money market fund. Is probably more expensive, less liquid. It's not that many advantages. So if you have access to the traditional thing, you just use that. There's no point. If you don't have access to that in the first place, you have to think about an alternative ecosystem of these kind of products. Yield-bearing stablecoins, tokenized money market funds, they're all relatively fluid products actually on the same spectrum. So yeah, it's I think it's just underlying the point. It's a point of access drives the product development, I think, rather than the product development driving the market. I think there's different ecosystem members, and they'll have different desires depending on what they've got access to from a yield-bearing perspective. But I definitely agree with you, Nicolas, in terms of the credibility point of view now is going to really explode. There's going to be an explosion of stablecoins. We're already seeing it. There's an explosion of yield-bearing products that are out there, from yield-bearing stablecoins to tokenized money market funds and everything in between. So counterparty risk, counterparty assessment, how the customers work out which is the right product to use is going to become a bit of a minefield. So like certainly from a bank FRIC perspective, taking a conservative approach is definitely prudent in that sense, and it leads into almost some of the stuff that we're doing at Stablecoin Standard with the stable check and all that kind of stuff. We haven't looked at yield-bearing stablecoins, but we wanted to start with the basic stuff first and then expand it out. But I'm sure that in future iterations, we'll look at that and maybe even algorithmic stuff in the future, but to see what's available for customers to engage in.
Without the yield-bearing aspect, it's no different than a pre-fund, right? And PSPs and fintechs have been dealing with pre-funds in other markets where money just sits idle for days and weeks because they're and it's usually, the, not to use a crypto word, but they're over collateralized, right? These pre-fund accounts are over collateralized because they're planning for a massive drawdown and they want to avoid that by any stretch of imagination. And so the yield, to me, is something that you have to have for the wider adoption, especially if you're going to convince a treasurer or a CFO to hold a balance in this, right? Otherwise, to your point, Nicholas, and to your point, Rami, might as well just keep it in traditional instruments that are giving you a yield. And now you have a bifurcated, maybe trifurcated balance across stablecoins and some in money market and some in, traditional assets of some sorts, because you're trying to make sure that you're making the best use of your treasury from that perspective. And to your point, in order to hold it all in stablecoins, you kind of need that instrument to be yield bearing. So that totally makes sense. I want to switch topics here, Nicholas. We had the pleasure of talking to Tony McLaughlin in their previous episode. His statement was, bank accounts are dead, wallets are the new bank accounts. And you mentioned something very interesting earlier. You said, with the adoption of digital assets, you're seeing the change of infrastructure to kind of service things that were already there, right? So the concepts are not changing, but the infrastructure is changing, which is kind of what Tony was saying as well. Do you see that where maybe a bank, not immediately, but the way that banks actually hold funds, etc., is not through bank accounts anymore, but through wallets?
I don't disagree with the statement. I mean, what is important to mention? I think banks will stay, but they have to change how they operate. So who knows if a bank only holds wallets in 10 years time. Let's put it this way. If we look at a bank account here, you can have a normal bank account in various different currencies, but you can also have a wallet where your Bitcoins or your USDC, just as an example, are deposited. Who knows if in 10 years time you have like different wallets, if they are called wallets then, or accounts, or bank accounts even, who knows? Since 10 years, I'm doing the same example. It's like, you can also use cash today and hold it or store it at home, but you don't have any protection. That's why you trust banks. The same with crypto, and we see that surprisingly more and more that crypto or that people don't want to store crypto at home and don't want to have the responsibility on their own. I mean, like if somebody's working since 10 years in crypto, I mean, they know how to handle things, but sometimes it's also associated with a lot of risks. I mean, we don't have to talk about that, but there's a lot. So I think there's a lot of good reasons to also bring crypto to a bank, because like you outsource the responsibility for it. You give it to a trusted party where hopefully you trust it. But the thing is, what needs to change for the banks itself, they need to change the way how to handle it. I mean, if it's that easy to make a stablecoin transaction, like when you enter a US dollar transaction, I think then we're going in the right direction. And then it comes about the upgrading, and then it needs to be, first of all, faster, which should be anyway the case with a stablecoin, and it needs to be cheaper. And then you have like a win-win scenario. You have the trust from the bank, you have the speed from the stablecoin, and also the cost reduction from the stablecoin compared to the normal wire, So I think we will see both. I think we see fiat as long as it will exist, and additionally to it, wallets, or however they want, or they are called back or in the future then. But I see a combination of that in a bank account and in other financial institutions which are dealing with today with normal transactions, but in the future also with stablecoin transactions. And with the future, I mean, like already from today, we see the combination here. We see combinations on other institutions. So it goes into that direction. But I think the important statement is the banks will stay, but they need to change how they work today.
That makes sense. Would love to get your thoughts on what's happening right now. All these banks, and various financial institutions are launching their own stablecoins. Fidelity just announced launching their own stablecoin, FIDD, I think. What are your thoughts on this? Should every bank be launching their own stablecoin?
I think not. My personal view. Coming back to where I work here, we had the discussion if it would make sense, and we clearly said no. Let's be the bank for the stablecoin issuers. Let's bank them rather than have our own one, which possibly competes with that. But I think the point is, if everybody issues a stablecoin, which ones do you use? Where do we have the liquidity? And so you create chaos. I mean, for a lot of companies, definitely makes sense in a closed ecosystem or in a public one. If you're a big institution to move money, what we see with other banks definitely makes sense. I would say for smaller banks, I don't really see the point of doing it. If you have a consortium of banks, possible, yes. But I think it also depends a little bit on the currency you're using. I mean, of course, when we're talking about the bigger ecosystem, then because having stablecoins as what you need for deposits and securities or tokenized securities in the future, absolutely fair. But do you need a stablecoin for payments in every different currency? Probably also not. Just as an example, take SEPA Instant for euros. I mean, you have to have a very good stablecoins to compete with the costs and the speed of that. And it's not the blockchain. So I think it's not always needed. I think there are definitely reasons for it, but in my opinion, I don't see that majority of the banks need their own stablecoins, because it's in the end, it's just competing about who can make money with it and not solving a bigger purpose.
Liquidity is the main challenge that every token faces from that perspective. And so then when you have assets like USDC or USDT that has a ton of liquidity, and then you have newer tokens that don't, the pairing just doesn't work, and it actually makes it so much more costlier, which is no different than the standard FX markets, right? From a currency perspective. What are some of the services that, people listening to this podcast should reach out to you or Bank Frick for if they're a crypto company or even a traditional company looking for a digital asset?
I mean, we have a lot of different services we offer. We also service a lot of different business models, and we would love to help everybody. The problem is we also have limited capacities and also some rules we have to follow. But in general, what we are doing, we provide all the basic banking services, from operational accounts to FX to almost up to 20 different currencies, also with safeguarding and client accounts. We provide all kind of traditional custody, execution only trading. Apart from that, we have the crypto related services, custody, staking, trading, also as an execution only, and Pulse, which is our flagship product, as we call it, where we combine 500-600 clients in that ecosystem together. Some of the biggest financial institutions like exchanges and OTC desks to a lot of other market participants, so they can interact with each other instant, free of charge, and it allows them to move around liquidity as fast as they need. So especially for traders, it can be a very interesting solution to have a bank account here, because they can on and off ramp with different exchanges in fiat within seconds. As an example, I mean, there's a lot of pros for it to work with us, and I mean, there's not a lot of banks offering these kind of services, but I think what I would like to see is more banks offering that kind of services, because that would help the industry grow faster. Because like, if there's so many companies which are working in this space which are not banked at the moment, and they cannot move as fast as they want to because they simply don't have the access to the banking world to grow, or for example, sometimes even fundraising. I mean, where do you deposit the funds? So yeah, I want to see more banks joining the game. If it's PSBs, if it's banks, if it's tier one banks, everybody. I think there's a lot of room here, and we're really at the beginning of this journey. So it's about time that they start.
And thank you for kind of leading the path on this, right? So where what you have done and what Bank Frick has done is set the example for how a banking institution can very gently and carefully enter the space when there was no regulation. And so what we should see going forward is a ton more adoption by financial institutions. Now that the regulatory clarity is slowly coming from that perspective, where can people find you, Nicolas?
It's a good question. They can always reach out directly to us via our webpage, via the LinkedIn. They can find me, especially on the flagship events in the crypto space, which has either flagship event or institutional events. We are representing Bank Frick most of the time. But apart from that, we have a good team which is willing to work with the clients together and make it possible to set up the clients. So always feel free to reach out through me through all channels you find. We're very happy to help there.
Really appreciate having you on here and your insights from a banking perspective, and your thoughts on yield bearing versus non-yield bearing stablecoins, etc. We look forward to really having you on a future episode. Maybe we'll talk about a Pulse payment network, if that's could happen.
I would love to.
That would be amazing. That was a thoughtful conversation with Nicolas Marxer from Bank Frick. As stablecoins move closer to the core of the financial system, conversations like this help separate what's possible from what's practical. Definitely subscribe and follow to the Stablecoin podcast for our next episode.